Good day, guys. Welcome to Trading Arbitrage Opportunities with Calvin Ports. I have decided to change the name of my YouTube account to Forex Money. Uh, so I need to create an account called Forex Money because when somebody is typing Forex. The nearest video that will appear is Forex Money because they typed the word Forex. The word trading arbitrage opportunities is a long name. Secondly, is a complicated name, so it will make it difficult for people to find my account. And the other reason why I'm changing this is because when you type my name and surname, you cannot you find there's another guy who's using my name and surname. And the other reason is that what the only way that you can find my videos is when you type Calvin Ports. So I need to create an account with the name Forex Money on YouTube so that I can actually, use Forex money instead of carbon ports, so that a lot of people can find my videos by typing the word Forex money. So here we're talking about the USD CHF for now. We're going to be talking about the US dollar, and on the next video, on on the next episode, we're going to be talking about the CHF. So for now, we're on episode 18, and on episode 19, we're going to be talking about the CHF. So, what is happening here? The price action part of the trade is that we have a first touch on the trend line, the second touch is here, and we're expecting a third touch in the future. We're expecting a third touch in the future. Reason why I'm investing on a bullish move, or the reason why I'm investing on buying the US dollar is 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 because uh, the market, the market sentiment and the economy, because of the sanctions and the tariffs that the U.S. economy was implementing, the even though the currency is telling me that it has recovered economically, I know that at the moment we are planning to sell the US dollar. We're planning to sell the US dollar, and in the price action realm, the banks are not willing to sell the US dollar when the US dollar is already oversold. So they don't want to sell low, they want to sell high. So they have no choice but to push the market higher, and so that the market can recover from the long-term downtrend. So it can recover. It can either reverse on the nearest order block. It can either come here and drop lower in the selling signal that we have in the future, or it can actually get to this trend line. This trend line can either get to it and drop lower. So in this bullish move, I'm not expecting the market to go above this level. It might manipulate it, but I'm not expecting it to go above the takeoff level. I'm going to explain what the takeoff level is with relations to interest rates. Uh, because I'm expecting when the market creates what we call the major bust or the boom bust processes. The boom bust processes, or this major bust that I have here, it happens when the market has recovered from a recession, and what happens is that the market breaks above the takeoff level. So that would be this major bust. At the moment, I'm not expecting that major bust because I am still expecting the U.S. economy. I'm still expecting the sanctions and the tariffs to be priced in. At some point, we were in a situation in the U.S. where the bay, all the bays in the United States, where the cargo ships deliver, offload and load the imports and the exports at the bay, those cargo ships, those shores were empty because of the tariffs that were implemented. At some point, the president of the United States was actually strict with the sanctions. So that's part of the reason why I'm having an economic sentiment that is telling me to sell the US dollar in the coming days. I won't tell you when because I don't want my account on YouTube to disappear. But for now, I'm gonna be telling you why I'm expecting a boom bust process, and part of the reason why I'm expecting a sell in what happened to the reason why I'm expecting a sell is because the unemployment rate is giving me a sell signal, even though it's not that big. It's like a 4.1%, 4.2, which is a bit higher. It's telling me that it's confirming that we're gonna be there's an economic sentiment that I've done research on that or next month we're gonna be selling the US dollar. So we cannot sell the US dollar that is oversold. We need we cannot sell low, we need to sell high. So the banks are gonna have no choice but to push the market higher so that they can sell it next month. So that's another thing that I'm looking at that is confirmed here that we're gonna be selling. Uh, Another reason why we're selling is because we need to price in those sanctions and tariffs that the president of the United States had implemented. So the reason the this part of inflation that I'm talking about is the major bust that I'm looking forward to when we're done with the selling that we're talking about. The major bust is one we get the this is the first touch, the second touch, the third touch will be here. And when that third touch happens, I'm expecting the market first touch, second touch. I'm expecting the third touch to manipulate uh, this trend line, and so that we can go move up above the major bust level when the economic recovery is implemented. But for now, because of the sanctions, we're not going to have this. This part that I'm holding is this part here because we're talking about the market repositioning itself for the sell next month. So here, this major bust that I'm talking about will be happening after the reposition after the market has sold. So let me tell you why I'm expecting this major bust. A major bust is created when the economy recovers from interest rate cuts. That's the major bust that I'm talking about. So the United States here had the inflation. Uh, Let me go to where is my interest rates? Okay, these are the interest rates. The US, when they were making their first interest rate cut, it was at 5.5%. And when they made the first interest rate cut, it was at 50 basis points. 50 basis points is when is we have a 5.5%. After the comma, after the point five, the the number point five after five is called basis points, and it is expressed as 50 or 20 depending on what the interest rate cut is. So when they remove the five, it is a 0.50. So we call it 50 basis points. Normally, when we cut interest rate, we cut them with 25 basis points, which is 0.25. So here they were aggressive by taking a double interest rate cut, which is 50 basis points instead of a 25 basis points. So the first interest rate cut was aggressive, it was a 50 basis points, and the following interest rate cut was a 25 basis points, uh, and furthermore, interest rate cut of another 25 basis points from 0.75. So since the December the 18th, they have not implemented any other interest rate cut. The reason why they have not implemented that can be seen here on inflation. Inflation in December was on 2.9%. At 1 to 3, it dropped to 2.3, and then it recovered to the 2.7%. And I'm not expecting inflation to actually move above 2.7. It might, but because we're still pricing in the sanctions and the tariffs, I believe that inflation might give us a bit lower because of those tariffs. But even if it does, I don't see a reason that we might go below the 2.4. Actually, we might get 2.5% in inflation. But after the pricing in of the tariffs and the inflation, I just wish that the president of the US can fix the tariffs and the sanctions that he has with other countries so that we can have, so that inflation can at least move to 2.8% or 3% somewhere here so that the economy of the US can recover. In terms of GDP, GDP was collapsing and it showed us a tiny recovery, which after the pricing in of those tariffs that I'm looking forward to, we might get a bit higher. Uh, we might get a bit higher in uh, the GDP recovery after those interest rates. So if we don't get that recovery, if we get a bit lower in inflation, if this inflation goes down to 2.4% or below 2.4%, the the Federal Reserve might be forced to actually introduce an interest rate cut from 4.5%, which is something that I'm not looking forward to. My intentions were that we get that if we don't get any interest rate cuts, this this economic projection that I have of a major bust, which is an economic recovery from interest rate cuts and a recovery from a recession. Uh, if I don't get that interest rate cut, I might believe in a recovery in the recession from the United States. But the pricing in the selling of the market is well expected economically because of the the tariffs have not yet been priced in. So that's part of the reason why I'm looking forward to selling the US dollar. So since we're going to be selling, this major bust will be taken out of the picture for now, and it might happen in the future. But for now, we need to price in those tariffs, and this repositioning of the market is made not because of fundamental reasons, but because the banks are looking forward to selling the dollar, which is why we need a drop in this trend line. We need to manipulate this trend line over here, so that so that I can believe in buying the US dollar. So this is the end of the video. We're gonna be talking about the CHF on the 19th episode. Goodbye, guys.